you very much, Chairwoman Smith and Ranking Member Hyde Smith. Always wonderful to be here with my Ranking Member Senator Bozeman. I appreciate you allowing me to go ahead. I'm juggling two committees, as all of us do at various times this morning. And first, I have to say welcome to all of you. And the good news is, overwhelmingly, we hear that crop insurance is the #1 risk management tool for farmers. So you're doing a good job of whoever you're talking. It is overwhelmingly what we hear, and I happen to agree with that as well. Throughout my time on the committee, I've been extremely supportive of crop insurance and have worked really hard to expand it. And certainly for us in Michigan, especially crop insurance has been really important over the years. And in 2014, I created a whole farm revenue protection plan, which has been a key option for diversified producers. And so I'd like to start with that. And Mr. Cole, I'd like to ask you to dive in a little bit deeper on the question of how we go about this type of insurance. And you talked about the workload relative to specialty crop policies generally has increased dramatically, and noted your organization has specific suggestions to help simplify coverage and make it more accessible. So could you talk about the workload connected in selling whole farm policies, and if the workload affects what type of policies that agents are selling, and any suggestions that you would have for simplifying that process?
Yes, Senator. As you know, I'm from Mississippi, so we don't have a lot of specialty crops in our area, but I can tell you—
A lot of catfish.
Yes, ma'am, that's right. But now, through our association, my fellow agents that are in the specialty crop really work hard. And the unique thing about crop insurance is through the 508H process, anyone that has a good plan or proposal can submit it, and it goes through the process. So it's continuously evolving and improving in the specialty crop area. And we're reaching out to more crops, as these guys have noted. There are more crops being insured, more programs being added every year. Recently, this has been a big success. They improved the hurricane assistance in the coastal areas to include tropical storm coverage, and that's been a big help. So that's a new issue that we've had, or new program that we've had that's been added. One thing on the whole farm that's, especially in your area of specialty crops, that's really been embraced. And some of our agents that we've been talking to have noted that the coverage cap on WFRP might need to be removed or raised substantially to include the bigger specialty crop operations, which in turn would lower the cost and the rates for a lot of the specialty crop areas.
Thank you very much.
Yes, ma'am.
I want to ask a broader question now, because I'm very confident that we're going to be able to work together on this committee and be able to move forward a farm bill, bipartisan farm bill that works for those across the country. My bigger worry right now is just the economic environment in which we are in with all of the discussion about default and so on. So we heard that the Fed Reserve Chair, Jerome Powell, said yesterday, no one should assume that the Fed can really protect the economy and financial systems and our reputation globally from the damage that a U.S. default might inflict. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. And so, Mr. Wagner, Mr. Morgan, Mr. Barker, could you talk a little bit about the implications to farmers and our ag credit system generally in terms of interest rates and credit availability if, in fact, the federal government were to default on its debts?
Sure. Thank you, Senator. Is my microphone on? As far as interest rates, the rapid rise in interest rates over the last 12 months will impact every operator that we have. Any operator we have with an annual operating loan, whether that be cattle, whether that be row crop, right now is facing interest rates that are more than 2 times where they were at the beginning of last year. We also have a number of long-term real estate loans that will reprice this year as their original pricing expires, and there's an opportunity to reprice that. they will be facing much higher interest rate costs. In some cases, we will have a number of producers who will face both of those, both higher operating line costs plus real estate interest rate costs. But through that, Farm Credit, we remain very well positioned to be able to weather that adversity with those borrowers as we continue.
Thank you. Mr. Barker?
Yes. Senators, that is a big topic for us as well. Our friends in the Farm Credit System have a better funding source than we do using the bond market, where ours is the local savings and CD rates that we have to pay. We are proposing a new bill. We have an acronym of ACRE. Some of you may have heard that. We've been on Capitol Hill promoting that. What we're asking for is that the interest on all rural ag loans and real estate in towns of 2,500 or less be tax exempt. And we've calculated that could mean the difference of 1.5% to 2.5% lower rates for our folks. And that is another tool that we would love to use for beginning farmers and our lower income families in our towns.
Mr. Wagner, did you want to respond?
I'll take a little bit different tack. I think the risk-free rate, which is what's driving our borrowing costs, impacts farmers every day. So the higher that goes, the more they're impacted, and it tends to compound because that drives other risk-free rates and borrowing for other parts of ag as well. Cost of fertilizer, cost of seed, all of those things are impacted by that risk-free rate. The higher that goes, the harder it gets, and that's something we're actively trying to work against, as I'm sure you are as well.
We are. And is it fair to say no one thinks that the U.S. defaulting is a good idea for farmers and ranchers? Okay, thank you, Madam Chair.
Thank you very much, Chair Stabenow. Senator Hyde-Smith.